If you have a credit score, this will affect you. Massive changes are coming to credit reporting in 2025. And if you're not prepared, your credit could take a serious hit. Today, I'm revealing the 3 huge updates that will impact millions of Americans and exactly what you need to do right now. I'm Colin Matthew. I'm a USMC veteran from Brooklyn, New York, and I didn't grow up wealthy. I learned discipline the hard way, serving our country, and along the way, teaching credit and finance to my fellow Marines. After my service, I built multiple 7-figure businesses in credit repair and funding, and I'm your trusted expert on all things credit. Trust me, you need to hear this. Have you ever heard of BNPL? It stands for Buy Now, Pay Later. And these are applications you've probably heard of, like Klarna, Affirm, Afterpay, and Zip. They're everywhere. Until now, they've mostly done soft inquiries and they didn't report to your credit reports, but that's changing fast. All 3 bureaus, Experian, Equifax, and TransUnion, will start heavily reporting these short-term loans. Why does that matter? Well, every new account drops your average credit age and drastically lowers your credit score. So what you should do immediately, stop using these buy now, pay later apps if possible. Reserve them for very important purchases for you and your family. If you have any existing buy now, pay laters, you might want to try to pay them off early. That way the account will close and will stop dropping your average credit age and boost your scores. The second big change is massive changes to medical debt reporting. Medical debt is destroying credit scores for over 15 million Americans, totaling over $50 billion. CFPB is finally stepping in. This new rule aims to remove medical debt entirely from credit reports, and the average increase seen could be as much as 35 points per impacted individual. But here's the catch, guys. They've been saying this for years, since Joe Biden was president, that they were going to remove medical debts, and they haven't done it yet. And political battles may further delay this or even reverse this ruling entirely. So what you should do is aggressively dispute medical debts right now, leveraging your consumer rights under the Fair Credit Reporting Act. And if you need a company to do it, look no further than Credit Veterans. Check out these results. We're removing child support, bankruptcy, collection, charge-offs, sometimes in the first month. Sometimes we're completely clearing profiles in as little as 3 months, 4, 5, or even 6 months. Close only counts in horseshoes. If you want the best home loan, auto loan, personal loans, and interest rates, you need everything removed. And we're the company that can get it done. Click the link in the description and the pinned comment to sign up. The last update is that Fannie Mae and Freddie Mac are going to switch to Vantage 4.0 starting 2025. And this is huge. This is the largest mortgage lender in America. And they're going to switch to the Vantage 4.0 scoring model instead of traditional FICO. That means more unpredictable loan approvals. Guys, if you don't know, the FICO score is typically 20 points higher than your Vantage score. So this could potentially lead to more riskier practices similar to the 2008 crisis. So here's my no BS advice. I personally would not be looking at buying a home right now. Interest rates are sky high, insurance and taxes are making it so unaffordable. I would focus on saving money and building my credit score aggressively so that I could take advantage of when the housing market finally resets and get in at a much better interest rate and prices. Look, the current economy is setting traps for people who aren't paying attention. I'm telling you straight, get your finances straight right now, strengthen your credit, and avoid these common pitfalls and mistakes. So here's a quick recap. I would avoid buy now, pay later apps right now to protect your credit age. Reserve them for important purchases. I would aggressively dispute any medical debts and leverage my Fair Credit Reporting Act rights to remove those and boost my scores. I would also look at delaying buying a home while strengthening my credit and my savings and investments to be ready when rates drop. If this video helped you out, smash that like button, subscribe to stay informed on all things credit, finance, and investing. Comment below what's your biggest credit concern in 2025, and I will personally reply to the top comments. Discipline beats panic every single time. So stay sharp, stay informed. This is Credit with Colin, and I'll see you guys on the next one.